Welcome back to another video with your host, DeAndre Simmons. Thank you guys for tuning into another show with me. And today we're going to be talking about, something a little different. We're going to be talking about real estate. We're going to be talking about what investment instrument should I use in my real estate, portfolio. If you have a real estate portfolio or you're deciding to start one, this is a great video for you to get a good understanding of, there's many different instruments in real estate, but these are the main three that I partake in or I'm going to use in the future and to create my real estate portfolio on top of the investments that I have, right? But this main three, you have REITs, real estate trusts, traded on the marketplace, right? Second will be your, I want to say, buying property and renting it out, but you have different ways of doing that. You can buy foreclosure, you can buy, ran down houses, flip them up, sell them. You can buy things the government repossessed due to taxes or things of that nature of people who neglected paying taxes. You can bid on those houses as well, and that investment strategy and that money making strategy I'm gonna tie up in another video, but you can do that as well. You can also just buy a regular property and just rent it out, right? Call those rental properties, right? But last but not least, third one would be your real estate crowdfunding, right? So REITs are typically traded on the marketplace. Not say typically, but they're trading on the marketplace, right? So you can make a portfolio. I will recommend this if you do not have a lot of capital. I will recommend not, going straight into buying property. I would recommend you do, buying real estate REITs because that's what I do. Great returns. If you're trying to build a dividend portfolio, REITs are very good for that because they always pay a dividend payout. And pretty much what a dividend payout is, for those who don't know what a dividend payout is, it's pretty much a company sitting down with their shareholders and discussing how much of the profit sharing they're going to have, right? So it's almost like profit sharing, right? So how much of profits you're going to get, right? After every quarter, right? So you can, depending how if you want to go about this, you got to figure out what the dividend yield is. The dividend yield worth investment, number one, right? But as you go on, once you build your portfolio out, you get a better understanding of what the REITs you want to buy. But pretty much, it's low capital, right? Low capital, so you don't have to, spend a lot of money, right, to get into these marketplaces and these investments. Liquidity, very important. How liquid can you turn your investment into cash? REITs on this list is the fastest way to liquidate any asset, right? Any asset liquidates with the REITs. Property, crowdfunding, REITs beat them 10 out of 10 every time. Every time. Just liquid, right? It's always liquid. Liquid is very good. Diversification. REITs has a lot of diversification. Excuse me. Investments. You can diversify. A REIT that specializes in, residential, commercial, industrial, right? You have REITs for everything in the real estate space, right? So diversify, right? You can say passive income. I wouldn't really say passive income because I don't really believe in passive income. I know a lot of people say, oh, you want to make passive income. I don't believe in passive income because you're going to need capital. And 9 times out of 10, for the person who works every day or the person who have a small business, right? Or even if you have a large business, you have a corporation. You got a corporation, you got a C Corp, S Corp, you making millions, you know, even your LLC, you making hundreds of thousands to millions of dollars in your business, right? You're still working for money, right? You're still working for money. So there's no really such thing as passive income, in my opinion, right? Yes, you have to put the work in to acquire the capital to buy these investments. So that's why I would say it's not really a passive income, because you have to put money into it, and money don't grow on trees. So you got to work for it. So passive income. And you get a dividend payout, right? So, you know, passive income, dividend payout, you can kind of put those in the same boat, right? But I wouldn't put in the same boat. But other than that, low capital. You don't have to deal with any management at all. You don't got to manage any tenants. You got to worry about no, you know, property maintenance, the AC breaking down, the refrigerator unit not working in the property. Your tenants are getting angry with you. You don't got to worry about vacancies, right? So REITs give you that really flexibility to kind of sit your money down and kind of forget it while, you know, the stock itself, the REIT itself is increasing. And you can cash in those profits by selling the stock, or you can just keep it and just, you know, drip it, you know. Dripping means just reinvesting, right? That's what I call it, right? Drip. So reinvesting back into the same stock, right, to buy more shares, right? And then you can just keep building your portfolio like that, right? But other than that, some cons with REITs: you don't have direct control. You know, the properties, the companies the REITs that you're buying it from, you don't see the property, you don't know what the property looks like. You know, it's almost like you just don't have no control, no direct control on what the company does or the REIT does, right? The dividends can fluctuate. The yield can fluctuate, so the payouts can fluctuate. So they can take that into consideration. And you're buying it on the stock market, so you're acceptable to high volatility, right? So, meaning the price of the stock or the REIT can go up and down no matter what, right? It can go up one day, down another day. You can lose money or you can make money, right? So, you're vulnerable to that volatility. But I mean, even buying property is still kind of affected by the marketplace in your general location of the property, right? Whether it's commercial or residential, right? But some cons of buying the property units. Number one, you have full control. You can dictate what the property looks like. You can dictate if it's going to be a residential, single unit residential, a duplex, a triplex. You get to, if it's commercial unit, you know, a condominium, a condo, right? You can really pick what space you want to specialize in with buying property. Physically, tangible asset is also a tangible asset as well. So you can physically touch it. So that's a great thing as well. And the potential of appreciation. And I say potential appreciation. Okay. I know some places in America, prices are increasing rapidly. The housing market is on fire. You know, it's growing fast, right? Apartment communities are being popped up a lot of places. Housing development is getting thrown up quickly, and you know, most people say their houses now are not being really well made now. So a lot of people say they're not really well made now as they were before. And we can get into that whole discussion in a different video. But generally, you're gonna have appreciation with the unit that you're buying, right? But I want to also say this as well. I do not want people to think that real estate is a get rich quick scheme or something I can make money quick and just, you know, flip it over and just keep doing it over and over and over and over. We actually lose more money. And I could come out with an Excel spreadsheet to show you that as well, that you would actually lose more money doing that strategy, right? Real estate is really to preserve wealth, honestly. In my opinion, buying the physical unit itself, a condominium, a single family resident, triplex, a duplex, a quadplex. If you have it like that, apartment community, it's to preserve wealth, really. It's to preserve it for long periods of time because, real estate is that one investment that carries all over to the next generation. So with that being said, it's to preserve wealth. But other than that, you're going to need a lot of money, especially now. Units going from 300,000 to 400,000 to 500,000 to close to $800,000-$900,000, close to $1 million. So you're going to have a lot of upfront cost, not factoring in property management fees. If you want to go get a property manager, vacancy as well. Got to factor that in as well. If you don't have any tenants in the unit, you got to factor in those expenses without having the tenant to pay the mortgage, right? Or the property taxes and so on and so on and so on, right? It's not liquid. No liquidity. I mean, it has some liquidity, but it's not liquid. You can't sell it overnight. So if you're trying to sell the unit, appreciated $20,000, I don't know, 2 weeks from now, and you're trying to sell it to gain that $20,000 appreciation, it's going to take you a minute to sell it. It's going to take you a minute to show it. Get a real estate agent, broker, whatever you want to get to sell the unit for you. It's going to take you a minute. It may take you 3, depending on the location, a month, 2 months, 3 months. So, you're vulnerable to market, market fluctuations, depending on what area you in, good or bad. Other than that, crowdfunding. Talk about crowdfunding now. Now, crowdfunding, it's like in the middle of a REIT and a buying physical units. I've done REITs. I've done real estate crowdfunding, buying into real estate projects essentially, and pretty much the capital for this is a couple hundred to a couple thousand, depending on what real estate projects, what real estate what funds you're buying into, right? And the only thing that was going on is you and a couple of investors are pulling your money together to buy a particular, most likely a commercial unit or apartment community or, a big unit, right? And you kind of get a percentage of that unit, right? So we're talking about, the more money you put in, the higher ownership you have on that real estate project, right? It can be a new development. It can be acquisition. Really depends. But other than that, the capital for this real estate, there's a lot of different real estate crowdfunding websites, or even apps. I've seen they came out with some apps as well, for you to get into that space. Relatively cheap, right? You can diversify the real estate projects itself. Really get a more dive deeper on the projects that you're buying into. Potential for higher returns more than the real estate REITs, more than the dividend payouts from the REITs, right? You have a potential to have a higher return, because you're not getting a dividend payout, right, from the REITs, right? So you're getting a rental income disbursement split amongst the investors. See, it's a difference, right? Oh, excuse me. It's a difference. It's less liquid than a REIT, but more liquid than buying a physical unit, right? So you're in the same ballpark. You're in the middle, right? So it's less liquid. It's less liquid than a physical unit. I mean, less liquid than REITs. Excuse me. More is less liquid than REITs, but more liquid than buying real estate properties themselves. There you go. And you have a risk of losing your entire investment. Yes, you heard me. You heard me say. Buying property, you have the risk of losing your entire investment with buying property. Same goes for real estate crowdfunding. You have the risk of losing your entire investment because you're buying into a real estate project, a development, and the development go bust. You know, they might try to sell off, and you may get a portion to, if you get some back, right? A portion of what you put in. It's a risk, right? But the risk, high risk, high reward, right? So that's why you have a more potential for higher returns, right? Because you're buying into this project. You're helping this project get off the feet. You're helping these other people buy or acquire these units, right? So if you have any questions or any feedback or any just input on this video, please put it in the comment section. Okay. I want to expand this conversation in real estate, right? I want people to understand that buying property is not the only way to invest in real estate, right? You have different other avenues you can take, right? So we got REITs, we got buying property, and we got crowdfunding, right? And there's different other ways too. You can buy smaller units. You can buy mobile homes. You can really get into a lot of underserved real estate sectors. You can get into trying to think. You can get into specializing. I only do condominiums. I only do residential. I only do commercial. I only do mobile homes. I only do trailer parks. I only do. The list goes on and on and on and on and on. But those are the main 3 investment instruments in real estate that you can use to develop your investment portfolio. So in the next video, I'll see y'all then. Bye-bye.